Show the chat. You can't hear my voice. Voice was on 9:47. They would have called you, no? Already. Okay. Friends, pay attention. Pay attention. Shh. Don't talk. So the deductions which we are going to cover now. See how many deductions are there? Section 32, 37(1). All the deductions are there. Okay, no? One by one we are going to cover all the deductions. Okay. So first deduction which you are going to get is section 30. If you are an assessee, you are any person doing business or profession. So assessee engaged in any business or profession. Now in that business or profession, if the building is used. Now tell me, KES Academy is having a coaching business. So in the coaching business, can you see any building being used? This building in which you are there, the classes are getting conducted. Can I say this entire building, this classroom at the first floor, second floor, this entire building is used for the purpose of coaching business? Yes or no? So in that business or profession, any building is used. For example, I am a chartered accountant. Not example, I am actually a chartered accountant. Okay. So in my profession, in my CA profession, will I use any office? So that is a building used for the purpose of my business or profession. I might have a factory which I am using in my manufacturing business. I might have a warehouse. I might have shops, go downs. Yes or no? So any type of building which is used for the purpose of my business or, so there are certain expenses related to this building. Number one, rent. Number two, rates and taxes. And number three, repairs. And number four, insurance premium. Did I say etc.? Did I say etc.? Only these four expenses. First one, second one, third one, fourth one. If these four expenses are incurred for this building, these expenses will be allowed to be reduced out of your business income. Section 30. So by taking the deduction available under section 30, what are you going to do? If you incur any of these expenses, reduce these expenses while calculating your business or profession income. Yes or no? From your income, will you take the reduction? Deduction means, are you allowed to reduce these expenses? Yes, reduce these expenses. Understood? Section 30 over. Number 1, number 2, number 3, number 4. Today at home, you read all these things. I have given some notes. Just go through these notes. That's it. You'll understand. But in this section, only this much information is sufficient. Okay. One important point I would like to address over here. If you are following mercantile basis, regularly the books of accounts are maintained on mercantile basis. So all the incomes taxable under the head PGBP has to be taken on. And all the expenses, all the allowable as deduction, has to be reduced on what basis? So if these expenses are related to this year, if these expenses are related to whether paid or payable, will be allowed as a except one expense. Rates and, even if you are following mercantile basis, all the expenses are allowed on mercantile basis, but not this rates and taxes. actually paid during the year, only it will be allowed as a deduction. There is one section, section 43B, if you remember. 43B allows certain expenses under the head of PGBP only on payment basis. So even if you are following mercantile basis, no deduction will be available for those expenses if they are unpaid. If they are, so you have to pay those expenses during the previous year itself, or on or before the due date of filing your ROI for the previous year. So pay the expense during the previous year itself, get the deduction. Or if you are not paid during the previous year, no problem. On or before the due date of filing ROI for this previous year also, you are paid. Then also you can take the deduction. But if the due date of filing of ROI is gone and you have not yet paid those expenses which are prescribed in section 43B, you are not going to get any deduction for those expenses in this year. Whenever you will actually pay, in that year you are going to get the deduction. Now all those expenses covers taxes. What? Duties, cess payable to the government under any law. So taxes, duties, cess payable to the will also include rates and taxes of the building which you are going to claim under section 30. Yes or no? Rent you will take on what basis? Mercantile basis. If you are following mercantile basis, take it on mercantile basis. Repairs, mercantile basis. Insurance premium, but don't take the deduction of rates and taxes based on method of accounting. It will be always allowed only on payment basis, even if you are following mercantile basis. Yes or no? Will you remember this much? So this was your section 30. Now coming to section 31. Section 31 says that if you are an assessee doing any business or profession, so in your business or profession, will you always use building only or other assets also? So take the example of this classroom only. Only this classroom is used in the coaching business. What about this furniture? What about this computer? This speakers? This entire setup, sound setup, yes or no? ACs are there, fans are there, lights are there, projector is there. These are other assets other than building, and even they are used for the purpose of business or profession. So you are earning business income. To earn this business income, these assets help you to earn the business income. Yes or no? Building will help you to earn business income. These assets are helping you to earn that business income. So any expense related to that building, any expense related to these assets should be allowed as a deduction. Yes or no? So now can you use any plant and machinery or furniture in your business or profession? So any repairs or insurance premium, any repairs or insurance of the plant and machinery or furniture which is used in the business or profession will also be allowed as a reduce that amount also from your business income. Section 31. Now did you see repairs here? Did you see repairs here? And did you see repairs here also for building? Yes or no? Now the repairs which are to be claimed as a deduction under section 30 and 31 cannot be capital in nature. Current repairs will be allowed. What repairs? Current repairs means because of that repairs, the value or the capacity of your asset should not increase. For example, if I talk about this building, if I talk about this, a small tile is there. See, this tile is there. This tile has broken, or there was some leakage in the ceiling. Yes or no? Or the paint of the walls has become dull. So what I have done? Painted the walls, repaired that tile, repaired that ceiling, By incurring these repairing expenses, will the cost of my building will increase? Cost of my building will increase. Earlier the building was worth 50 lakhs. I have incurred this repairing expense. Now the value becomes 80 lakhs. Hello? Will the capacity increase? This is a repair of current nature. Repair of, only the repairs of current nature will be allowed. Only the repairs of, any repairs of capital nature, any repairs due to which either the value or the capacity increases, due to which the value or the capacity increases, will not be allowed as a deduction under section 30. Simple thing, I am telling you. This classroom is a little bit, smaller for me. Number of students coming is higher and I want to accommodate more students in the class. What I did, I broke this wall and extended the classroom. I'm still doing the repairing work only. Yes or no? But that repairing, because of this, can I say the area of the classroom will increase? I'll be able to accommodate more students. The classroom will become bigger. Now a smaller classroom, capacity is small, value is small. I incurred the extension expenses, repairing expenses on extension. Because of that, what happened? Area increased, capacity increased. Definitely the value will also increase. This repairing expense cannot be claimed as a deduction under section 30. Why? Because this is capital in nature. By incurring this repairing expense, the cost is increasing. Then what should I do? What should I do? I will capitalize this amount with the cost of my building. So the building is there, which is my asset. In the value of building, in the cost of that building, the repairing cost will be added and will be allowed in small parts in the form of depreciation. I cannot claim that amount entirely at once under section 30. 30 will allow you the deduction only for repairs of current nature. Repairs of. Likewise, if you go to section 31, here also the repairs is used. The word repairs is used. Repairs to plant and machinery, repairs to furniture. For example, I have one machinery. To keep that machinery in working condition, normal repairing work is done. That machinery, to keep it in working condition or to bring it in working condition, I am incurring some small repairs. By doing that repairing expense, capacity of my machine is not increasing. Machine has not started producing 20,000 units. Its capacity is 10,000. It is still producing 10,000 units. Yes or no? But if I repair the machine and I add one motor, extra component in the machine, and because of that, the capacity of the machine gets doubled. Now, it is not a repair of current nature, it is a repair of capital nature. Will be added to the cost of machine, will be allowed in small parts in the form of depreciation. I cannot claim it under section 31. Hello sir, will you remember? Now tell me, where it is written that the plant and machinery or furniture which you are using in the business, you should be the owner of that plant and machinery. Is it a requirement that you should be the owner of that plant and machinery? You should be the owner of that furniture? No. The plant and machinery or the furniture may be owned by me, may not be owned by me. But if that plant and machinery or furniture is used in my business or profession, its repairing cost and its insurance premium, if I have incurred this expense, I am eligible to get the deduction under section. Same logic is with building. Same logic is with the building which is used for my business or profession may be owned by me or may be taken on rent by me. Yes or no? But if I have paid those 4 expenses for the building, I am going to get the deduction of those 4 expenses. But remember, if I'm the owner of the building, if I'm the owner of the building, then definitely I am going to get the deduction for 3 expenses only. Repairs, insurance premium, and rates and taxes. I'm not going to get any deduction for rent. Why? I won't be paying any rent. Getting my point? Because the building is owned by me. Will I pay any rent for plant and machinery or furniture? If it is owned by me? No. But if it is not owned by me, will I pay any rent? Will that rent be allowed as a deduction under section? Where it is written under section 31? Did I write repairs, insurance premium, etc. or only 2 expense? So will I get the deduction for that rent? Yes. Not under this section 37(1), general deduction. Because that is also an expense related to my business. Specific section does not allow me to take that deduction, but there is a general deduction which says that any expense which is of revenue nature, not incurred by the assessee for personal purpose, incurred by the assessee wholly and exclusively in relation to business, then that expenditure can also be claimed as a deduction. 37(1), general deduction. Getting my point? So this section 30 specifically talks about 4 expenses. 31 specifically talks about 2 expenses. So whenever I take the deduction for these expenses, I will refer that I am taking this deduction as per section 30. I am taking this deduction as per section 31. But if there are some expenses which are related to your business, wholly and exclusively incurred for the purpose of your business or profession, yes or no? Not capital in nature, not incurred for personal purpose, and not allowed under the specific sections from 30 to 36(1), then those expenses will also be eligible as deduction under section 37(1). See, if you will apply some mind, apply some common sense, then these expenses, if you don't remember the section also, and if I'll ask you, general, that to do this business, whatever income you are earning from this business, take those incomes minus what all expenses which are happening in this business, keep on reducing them. Now, in the course of doing your business or profession only, you are using this plant and machinery or furniture, that building, So, any expense relating to these plant and machinery, furniture, building has to be allowed as a deduction. Some expenses will be allowed specifically under specific section, and some expenses will be allowed under general deduction 37(1). Will you remember this? 30 is done, 31 is done. Okay? Today itself go home and finish these 2 sections with notes. Getting my point? Now see, pay attention. 38 is there. 38 is there. 38 I'm going to do a little later after completing depreciation. Then it will make sense. Okay. So right now I'm keeping 38 in hold. Yes or no? Now let's come to the next section. 32. Favorite section of this head. 32. Many of you might have problem in this. And even the institute knows that out of 100 students appearing in the examination, 95 students get a problem in depreciation. Only 5 students are comfortable. So they are going to ask in the exam what 95 people are comfortable of or uncomfortable of. Definitely the things which we don't know or we are less confident about, those things only come in the exam. Why? Institute knows that. Simple thing. What is depreciation? Come on, tell me. What is depreciation? Wear and tear. Over the period of time, due to efflux of time, the value of the asset will come down. That is what? Depreciation. Yes or no? Forget all this bullshit. What? Forget all this bullshit. Whatever you remember about depreciation, no? Throw it outside the classroom. You will remember only that which I will tell you. Are you necessary? Doing any business or profession? for that business or profession, can you acquire assets? To acquire the assets, will you incur cost? That cost is a revenue expenditure or a capital expenditure? Small amount or a big amount? That big amount cannot be allowed at once. Why? Simple logic. Because this much huge amount which you have incurred to buy the asset, if it is allowed at once from this year's business income, it will eat your entire income, result into loss. And this loss will eat another income. Hello? Will you pay any tax in this year? And still the loss will remain. Now that loss will be carried forward to subsequent years. Subsequent years also, it will eat your incomes. Will you ever pay tax? So if you don't want to pay tax, what you will do? You will buy the asset, having higher cost, take the deduction of the cost out of the income, so that your income gets zero. Nobody will pay tax. And apply some logic. The cost of this asset, if it is allowed as a deduction from, if it is allowed fully as a deduction from 1 year income, is it helping you to earn income only for this year? Or the asset will be used for number of years? So this asset is going to help you to earn income for number of years. It is going to help you to earn business income in future years also. Then why the bloody hell the cost should be allowed as a deduction from this year's business income only? It does not make any sense. It is completely illogical. Yes or no? So, are you an assessee? Have you acquired assets for the purpose of your business or profession? To acquire this asset, you might have incurred some cost, known as actual cost, known as you incur these costs on a regular basis. Do you incur this type of cost on a regular basis? No. This is not a revenue expenditure. This capital expenditure is disallowed in the previous year in which it is not allowed at one time expense. So the year in which this expenditure is incurred, in that year, it is not allowed as a single expenditure. Yes or no? Claim this entire amount in small parts in the form of, under the PGBP head, depreciation means cost of the asset, capital expenditure, which is allowed Now it is there. It was not there, no, for this much time. It suddenly goes. Now it is okay, no? Now tell me, how many types of assets you can use in your business? Common sense. Tangible, intangible. The assets which are used in the business can be classified into two parts. Tangible or intangible means patent, know-how, copyrights, franchises, informations, yes or no? Even goodwill is also there. But for the purpose of PGBP head, goodwill is not treated as specified asset. So even if you have purchased the goodwill for the purpose of your business or profession, the cost of that goodwill cannot be claimed under the head PGBP in the form of depreciation. Getting my point? Why? Because goodwill is excluded. Goodwill is with effect from 1st April 2020. With effect from, meaning if the goodwill is purchased for the purpose of business or profession on or after 1st April 2020. So goodwill is purchased. Wait, If goodwill is purchased, it can be purchased on or after 1st April 2020. So to purchase this goodwill, you might have incurred some cost, actual cost, which is nothing but capital expenditure. What are you going to do with this? Should be allowed under the head PGBP or should not be allowed? Should not be allowed. Meaning, on goodwill you cannot claim depreciation. Cost of goodwill is not allowed as deduction under the head PGBP. So ignore goodwill while calculating PGBP income. Ignore goodwill for the purpose of depreciation calculation and all. Yes or no? But this happened on or after 1st April 2020. So any goodwill which is purchased, this entire cost will be ignored. Will be under the head PGBP. That does not mean that we are not going to allow this cost. We are going to allow. Whenever you will sell this goodwill in the future, goodwill is your capital asset. Goodwill is your any asset used in the business, whether tangible or intangible. All assets are capital assets only. But since those assets are used in the business, their cost is allowed under the head PGBP out of your business income. Hence, those assets are not considered separately under capital gains. Getting my point? So now, any type of assets, whether tangible, intangible, all assets are capital assets. All assets are, whether they are used for business or any other purpose. All types of assets are capital assets. But if some assets, which are capital assets, which are used to earn your business income, their cost has to be allowed out of your business income only, no? Hence, the assets which are capital assets, which are used for the purpose of your business or profession, they are not separately considered under capital gain head. They are brought under the head PGBP. Their cost is allowed as a deduction under the head PGBP, either fully or in the form of depreciation. Getting my point? But what about the other assets? What about the other assets? They are all capital assets. And if they are not specified for PGBP purpose, definitely their cost is to be considered while calculating their capital gain when they will be actually transferred. Apply this logic. Now tell me, goodwill purchased on or after? Will it be treated as a specified asset for PGBP purpose? No. So their cost cannot be claimed under the head PGBP while calculating business income. Not fully and not in the form of depreciation also. So where the cost will go now? This cost will go to capital gains head. This cost will be allowed as a deduction while calculating the capital gain of goodwill when you will actually transfer this goodwill. Will it be allowed right now or at the time of transfer of goodwill? Under the head capital gain. So don't worry, the cost we are not denying, we are allowing the cost, but we are not going to allow it while calculating your PGBP income. Yes or no? Now tell me, if the goodwill was purchased prior to 1st April 2020, yes or no? If it was purchased prior to 1st April 2020, then its actual cost, its capital expenditure was some amount. Out of that amount, already some amount would have been allowed in the form of depreciation under the head PGBP, because prior to 1st April 20, the goodwill was considered as a specified assets. Its cost was already allowed as depreciation. Getting my point? So for example, you would have acquired this goodwill prior to 1st April 20. At that time, out of this cost, some cost would have been already claimed as a deduction under the PGBP head in the form of depreciation. Balance cost will be still remaining, known as WDV. That will be disallowed. That will no more be allowed under the head PGBP. Ignore that goodwill also. Now the remaining cost will go to capital gain. Yes or no? So tell me, minus what you will do? Depreciation claimed till 31st March 2020 on that asset. Yes or no? On that goodwill. So you will get what? WDV as on 31st March 2020. Now this WDV is nothing but the remaining cost. Let's take one example. The rate of depreciation for intangibles is 25%. How much? Under the PGBP head, the rate of depreciation on intangibles is 25%. Okay. So for example, you acquired the goodwill in 1819. Sorry, not 1819. 1718. You acquired the goodwill in for rupees 10 lakhs. Now tell me, when the goodwill was acquired? On or after 1st April 20 or prior to 1st April 20? Prior to 1st April 20, the goodwill was acquired. What was the cost of the goodwill? What was the cost of the goodwill? Now that time, the goodwill was considered as a specified asset. And the depreciation was available. So you would have definitely claimed the depreciation for 1718. And definitely you would have claimed the depreciation in 1819. And definitely you would have claimed the depreciation in 1920 also. How much depreciation you would have claimed? 25% on WDV basis, yes or no? So first year depreciation would have been, this is the depreciation for 1718. Reduce that. You get 7 lakh 50. On that you would have claimed the depreciation for 1819. How much? 187. This is the depreciation which you would have claimed in 1819. Now reduce that amount. How much amount is remaining? 5 lakh 62,500. On that again 25% you would have claimed in 1920. Tell me how much? 1 lakh 40,000. This is the depreciation which you would have claimed in 1718, 1819 and 1920. How much is remaining? 4 lakh 20, 870. Can I say this is the cost remaining out of 10 lakhs? This is the cost. Out of the entire 10 lakh, Some cost was allowed in 17-18. Some cost was allowed in 18-19. Some cost was allowed in 19-20. Already till 19-20, some part of your 10 lakh cost we have allowed in the form of how much is still remaining? Out of 10 lakh, this much is still remaining. This cost is still remaining. Will not be allowed as a deduction under the head PGBP. Because under the head PGBP, goodwill is no more considered as specified asset. Whether it was purchased earlier or it is purchased on or after 1st April 2020, goodwill is no more considered as. So what are you going to do? Come on, tell me. This 4,21,875, which is the remaining cost, which is nothing but WDV as on 31st March 2020. Are you going to claim this amount in the form of depreciation? Hello? So do one thing, take this amount also to capital gains. Now this amount will no more be available as depreciation under the head PGBP. Got it, sir? So tell me, what am I supposed to do here? If the goodwill was purchased on or after 1st April 2020, then whatever cost you have incurred on that goodwill, not a single rupee out of that will be allowed as depreciation. Forget about that entire cost. Take this entire cost under the head. Take this entire cost under the head capital gain. This will be ignored while calculating your PGBP income. Now, if it was acquired prior to 1st April 20, then cost definitely you would have taken under the head PGBP. Out of that cost, some cost you would have already taken as a deduction in the form of depreciation. Now, can I say this is the remaining cost? This will also be ignored under the head PGBP. This will also be ignored under the head PGBP, and now the remaining cost will be taken to capital gain head. Whenever this goodwill will be sold in the future, entire 10 lakh will not be allowed as cost. Only the remaining cost will be allowed as cost to calculate your capital gain. Because out of the cost, some cost we have already allowed you to calculate PGBP income in the form of depreciation. To that extent, the cost will not be allowed again. But the remaining cost which we have already ignored under the head PGBP, that cost now you can take under the head capital gain while calculating capital gain of this asset. Yes or no? Will it be allowed right now? Or at the time when the goodwill will be sold? Will it be allowed right now or at the time when the goodwill will be sold and the capital gain will be calculated? At that time, this cost and this cost will be allowed there. Were you aware about this? Or first time did this? First time, no? These things, if they ask in the exam, in a case study, and give you 4 options, will you be able to choose the correct option now? Yes or no? Now this was your specified asset. How many assets are there in the business? 2. Intangible and intangible assets. Any intangible asset used in your business. Take all the intangible assets. What did I say? Take all the intangible assets. Cost of those assets will be allowed in the form of depreciation. Other than. So can you take the copyrights? Yes. Patents? Yes. Know-how? Yes. Any intangible asset which you have acquired for the purpose of your business or profession, the cost of that intangible assets will be allowed under the head PGBP only in the form of depreciation other than intangible asset. Done. This is specified asset 1. Now, can you have tangible assets? Can you have tangible assets used for the purpose of your business or profession? What type of tangible assets you will have? Start from land. On that, building is constructed. With that building, plant and machinery and furniture will be used. Yes or no? These are all tangible assets. Touchable, seeable, hello, feelable. Can you touch? Can you see? Can you feel? Yes, because these are tangible assets. Tangibly you can see these assets. These are not just to be felt. These can be seen. Can you see the projector? Tangible asset. Fan? Fan. This building. This air conditioner. This computer. Every asset is a tangible asset. Now tangible asset. The building is standing on a land. Land is also a other than land. What did I say? Every other tangible assets will be considered under the head PGBP. Other than every tangible asset used for the purpose of business or profession will be considered under the head PGBP. Its cost will be allowed under the head PGBP in the form of depreciation. Understanding? Cost of land will not be allowed. Why? Common sense, common sense. Land is not a depreciable asset. Even if it is used for the purpose of your business or profession, its full cost we cannot allow here. Because full cost will not be a small amount, it will be a huge amount. So forget about giving the deduction for this huge amount. We are not going to give you, we could have given the deduction in the form of small amount. But that small amount is known as depreciation. Bloody, how do we allow you the cost of land in the form of depreciation? Others will laugh on us. That see, the government of India allowing the cost in the form of depreciation for an asset which is not depreciable, which is an appreciable asset. People will start laughing on us. Ignore the land from PGBP head. Land will never come under the, even if it is used for the purpose of business or profession. Entire land and its cost will go to capital gains. Whenever this land will be transferred, at that time the cost will be given as a deduction while calculating its capital gain. Cost of land cannot be claimed under PGBP head, neither fully nor in the form of depreciation, because land is also not a specified asset. Other than land, building, then furniture and fittings, and every asset which is not a building, not a furniture, under the Income Tax Act, it is known as plant and machinery. This classroom, it is a building. This classroom, the chairs on which you are sitting, I am sitting, this table, furniture. Is it the only furniture? The door which you can see, that is fittings. The door is known as furniture and fitting. The ceiling, it is furniture and fitting. Hello, ceiling fan. It is furniture and fitting. These electricity boards, switches, they are furniture and fittings. Internal wiring for these tube lights, etc. These are furniture and fittings. Getting my point? But anything which is not a building, not a furniture or fitting, will be treated as projector, plant and machinery, computer, plant and machinery. Hello, sir. Then air conditioners, plant and machinery. The car used to bring the professors to the classroom, plant and machinery. Hello. Every asset is a plant and machinery if it is not a building or a furniture or fitting. Yes or no? Hello. Now the term plant is also defined. The term plant includes ships, books, vehicles, scientific apparatus, surgical equipments. For doctors, surgical equipments are also treated as plant. Yes or no? Scientific apparatus is also treated as plant. Vehicles, books are also treated as plant. Ships are also treated as, if you see any of these assets, they will be classified under plant and machinery as plant. Their cost will also be allowed under the head PGBP in the form of depreciation, because they are also specified and they are covered in the definition of plant. But see, what an irony. Actual plant is not treated as plant. Tea bushes. Tea bushes, plant only. But for PGBP head, it is not treated as plant. Livestock, animals used in the business, yes or no? Either sold as stock or used in the business as it is. Cows in the dairy business, they are livestock? No, cows are not being bought and sold. They are used in the business for long term to give milk and produce milk products, yes or no? So cows are animals used in the business. Animals used in the business, but they are not livestock in that business because they are not being bought and sold. So even you talk about any animals which are used in the business, or even you talk about the livestock of that business. Livestock means poultry farm is there. So the chickens which will be sold by the poultry farm will be their livestock. They are dealing in buying and selling of chickens. So chickens are what? Animals. One type of animal only, no? Even the birds are treated as animals. Hello. One pet shop is there where you get small dogs, puppies, those small tortoises and all, rabbits and all. These pet shops are having the animals as their stock in trade. But that stock in trade will not be treated as stock in trade. It will be treated as livestock. It will be treated as their purchase cost is already allowed as a deduction while calculating your PGBP income. Out of the selling price, their purchase price is already allowed as a deduction as their revenue expenditure. Now you want to claim it again in the form of depreciation. Hello? Will not be allowed. Because purchase price of any stock in trade will always be allowed as deduction, as revenue expenditure under section 37(1). So animals, what did I say? Or livestock will not be treated as plant. Tea bushes will not be treated as plant because their cost is already treated as revenue expenditure and it is already allowed as a deduction while calculating your PGBP income. Getting my point? Hello. But if the animals are there which are used in the business for long periods of time, not as stock in trade, even their cost is allowed separately when they die, when they become useless in the business. That time their cost is allowed separately. So don't consider those animals also as plant. Don't take the depreciation on them. It doesn't look good if you take depreciation on something which is a living thing. Assets are non-living things. These are all living items. On these items, you want to claim depreciation? Are you mad or what? Hello, sir. Next one. Human body and its parts. Stock in trade in the business and even building and furniture. Anything out of this, if you see, you cannot call them as plant. They are not treated as plant. Not a plant and machinery. Getting my point? But if you see any of these items, they will be treated as plant. Plant. Yes or no? And their cost can be claimed as deduction under the head PGBP because they are known as plant, meaning specified asset. Did you understand the meaning of specified asset? Hello? Tangible assets. Tangible assets. All tangible assets except will be treated as specified asset. Tangible assets are further classified into building, furniture and fitting. And if any tangible asset is there which is not a building, not a furniture and fitting, it will be plant and machinery. Specifically, the term plant includes ships, books, vehicles, scientific apparatus, surgical equipment. But the term plant does not include, it excludes tea bushes, animals, livestock, building, furniture, human body and its parts, and stock in trade of the business. Even though they are assets, they might be assets, yes or no? Giving you long-term benefits. But sometimes their cost is entirely allowed as revenue expenditure. Or it is not advisable to call these assets as what? Plant and machinery. Government does not want to allow this cost at once. Getting my point? Sorry, in the form of depreciation. So sometimes the cost will be allowed fully, or the government does not want to allow any deduction for the cost incurred on them. Hence they are excluded. Otherwise, unnecessarily you will start calling these items as what? Plant. And start claiming expenditure incur for these items as what? Depreciation and as your business expense. Getting my point? So if the deduction is available for any of these items, it will be specifically given. Claim that at once, but they are not treated as plant at least. Getting my point? So everyone, now the assessee having any specified asset which is used for the purpose of his, this assessee must be the owner of these specified assets. If he is the owner, he must have incurred the cost. So that cost should be allowed to him in the form of depreciation. But what if he is not the owner? What if he is not the... Has he incurred that cost of the asset? No. So that cost should be allowed to him or should not be allowed to him? Should not be allowed to him. Because he is not the owner. He has not incurred the cost. But sometimes, even if you are not the legal owner of the asset, even if you are not the... You have incurred the entire cost. You have incurred the entire cost. And in that case, you will be treated as beneficial owner. As per the landmark judgment of Supreme Court in Mysore Minerals, it was held that even if the assessee is not the legal owner, but since he has incurred the entire cost, the benefit of that cost should be given to him in the form of depreciation by considering him as a beneficial owner. The best example is assets purchased on hire purchase basis. Who will incur the cost? You only will incur the cost. Some cost you will incur right now, down payment, and the balance cost will be treated as your loan, which you are going to pay in small parts. And bloody that asset you are going to capitalize in your books, in your balance sheet as your asset, yes or no? So if you are bringing that asset in your balance sheet as your asset and its entire cost you are only meeting, it is just a matter of time that after some time when you will pay the entire amount, that time you will become what? The legal owner. So till that time you should be the eligible person to get that depreciation. Even if you are not the legal owner, you will be treated as beneficial owner. Hire purchase is there. Yes or no? So in the case of hire purchase, this can happen. Now pay attention. Asset must be specified. Asset must be tangible as well as intangible. Tangible asset, land will be excluded. All other assets will be considered. All other assets will be classified into three parts. Number one, building. Number two, furniture and fixture. And anything else will be treated as plant and machinery. Intangible assets can be used. Intangible assets can be used. So intangible assets will also be considered. Yes or no? Other than on or after 1st April 2020 or even prior to 1st April 2020, whatever goodwill was purchased, ignore the entire goodwill. Yes or no? Next one, the asset, which is a specified asset. The assessee should be the owner of that asset. What type of owner? Legal owner. And sometimes even if he is not the legal owner, he can be the beneficial owner and the depreciation can be allowed to him. Now, lesser and all these things are not that important. You just have to read it once, hire purchase and all. Okay. Now, specified asset, the assessee must be the owner. This specified asset must be used for business or profession to claim the depreciation. To claim the specified asset must be used. So use must be active use. Use must be active means to deliver the classes, camera is working, projector is working, these benches are being used, this computer is being used, music system, AC, everything is installed, and are in active use. Yes or no? So on these assets, the depreciation can be claimed, no problem. But wait, some assets which are not actively used in the business, but they are kept ready for their intended use. Kept ready for their intended, meaning that as and when the need will arise, immediately those assets, the assessee will start using those assets in the business. For example, one camera is being used right now to do the lecture recordings and all. Okay. Now what if this camera, there is some problem, technical problem in the camera. Now to fix this camera, to repair this camera, time will be taken. Yes or no? 15 days, 20 days time will be taken. Till that time, how the lectures will be recorded? Recording has to be done, no? So there will be a standby camera, which is already purchased. But it is not in active use. But the moment the need will arise, immediately that can be put to use. So even if that camera is not in active use, it is considered as if it is being used, because that use is known as passive use. For that asset also the depreciation can be claimed. Do you know fire extinguishers are there in the building? Red color big bottles. What do you think? Active use. Every day there is a fire. Every day it is extinguished. They are not in active use. But whenever the need will arise, they are ready for their intended use. Yes or no? So they are in passive use. So the asset must be used. Actually used. If not actually, then they are kept ready for their intended use. As and when the need will arise, they are ready for their use in the business. They will immediately put to use in the business. Yes or no? On these assets, the depreciation can be claimed. Yes or no? Now pay attention. Now, see, one very important thing, depreciation calculation will happen only if, this is the assessee. He can be any person. He has incurred actual cost of any asset. That actual cost is nothing but capital expenditure. Now this actual cost has to be claimed under the head PGBP. Either this actual cost, if some section is there specifically allowing this actual cost fully, then this actual cost can be claimed fully. Yes or no? Like section 35AD is there, which says that actual cost of the assets which are purchased for the specified business will be allowed fully. So if you take the benefit of section 35AD, then this actual cost can be claimed fully under section. If the asset was acquired in the business for scientific research, so the actual cost of that asset will also be allowed fully. So this actual cost can be claimed under the head PGBP either fully or in small parts in the form of depreciation. It can be allowed fully under section 35AD, section 35, etc. Yes or no? Hello? But if it is not covered under any specific provision and it is used for the purpose of business or profession, this asset is used for business or profession. Now tell me, the asset should be specified. Specified asset, you remember no? This asset should be owned by assessee. And next one used for the purpose of business or profession. If all these three conditions are fulfilled, then only the actual cost, then only the capital expenditure of that asset can be allowed either fully or in small parts in the form of, now if you want to claim it in the form of depreciation, you'll have to follow section 32. Read with rule 5. Ready? How to calculate this depreciation? But wait, whenever you will calculate depreciation, whatever you have studied in accountancy, you will forget everything, because nothing like that happens here. What we do usually, see, if this is my financial year, 24-25, 1st April 2024 to 31st March 2025. If one asset is acquired or purchased on 9th of July 2024, what we usually do? From 9th to 31st, depreciation is calculated, and that depreciation is charged in P&L. Yes or no? What if I will change the example, 1st April 2024 to 31st March 2025. Asset was already there with you in the beginning. So when the year started, the asset was already there in the business. But in this year, the asset was sold on 19th of September 2024. This is the date on which asset is sold. So can I say from 1st April till 19th September, till the time the asset is not sold, the depreciation is calculated for this period? Yes or no? If you will do this or you will do this, you are gone. This is also not to be done. This is also not to be done. Then what is to be done? Under the head PGBP, under the head depreciation shall always be calculated for the full year. There is no concept of calculating the depreciation for number of days or number of months. The depreciation will always be calculated for full year. Hello? Now, it is calculated for full year at full rate applicable. Full year by applying what? Full rate applicable, or it can be calculated for full year by applying half of the applicable rate. Meaning that there is no concept of half year depreciation. Depreciation for some days, depreciation for some months. No, that does not happen. Depreciation will always be calculated for full year. Full. Either by applying the full rate which is applicable, or by applying the half rate out of that applicable rate. Yes or no? So always the depreciation for full year at full rate. Always the depreciation for full year at full rate. Full rate. But there is one exception. There is one. In that exceptional situation, the depreciation will be calculated by applying half rate. But still the depreciation will be calculated for the full year. Because there is no concept of calculating the depreciation for half year, for few months, for few days under the Income Tax Act. Getting my point? Under what situation the rates will be half? If asset is acquired in any previous year. If the asset is acquired in any and in that same previous year, I'm talking about the previous year in which the asset is acquired. In that same previous year, the asset is used for a period of less than 180 days. Then depreciation for that previous year. Depreciation for will be calculated for full year, but at half rate. Will you remember this? Now tell me, if I tell you asset is acquired in any previous year. Now tell me one previous year, let's take an example. Previous year 24-25. So the asset was acquired in now in that so I am talking about 24-25 or any other year. In that same previous year, meaning 24-25 only, the asset has to be put to use. But the asset is used in that same previous year. The asset is for a period of, then the depreciation which you will calculate for that previous year, meaning 24-25, the year in which the asset was purchased. For that year, the depreciation will be calculated at full year, at full rate or half rate. Yes or no? Will you remember? Sure. Now you will give me the answer. Few case studies. One, asset acquired on 19th of August 2024. Date of purchase 19th August 2024. And it was put to use. Let's assume that it was put to use on the same date. Now, previous year 24-25. Depreciation at full rate or half rate? Asset was purchased in 24-25. In 24-25, it was put to use for how many days? More than 180 days. How did you know? You check the date on which the asset is put to use. From this till 31st March. Till. Now August has how many days? 31 minus 18. 31 minus. How many days are remaining? 13 days. 13 days of August. September 30 days. October 31. November 30. December 31. January 31. March 28. Sorry, February 28. March 31. Total 225. So the asset was acquired in 24-25. And in the year in which it was acquired, in that same year it was put to use also. And it was put to use for how many days? 225 days. Which is more than 180 days. So the depreciation at full rate will be available. Full rate will be available for this year. Did you understand? Now, purchased the asset on 19th of August 2024. And that asset was put to use on 4th of December 2024. Half rate? How come half rate? You will count the date from 19th August, no? Or 4th of December. The date when the asset is put to use is 4th December. 3 days of December will be removed. 28 days in December. January 31, February 28 and March 31. How many days? 1. The year in which the asset is purchased. In that same year the asset is put to use. But it is put to use for a period of less than 180 days. So in that year the depreciation will be calculated for full year. But at half rate. Yes or no? Many students call this as half year depreciation. Many of you might be giving the term half year depreciation. If you say that no, the answer is wrong. Depreciation is never for half year, some months, some depreciation always for full year. But it can be at full rate or half rate. Getting my point? Now one more example I'll take. The asset was acquired on 29th of March 2025. In my previous year the asset is acquired. Yes or no? Now the asset was put to use on 19th of May 2025. Tell me. My first question. This is previous year 24-25. This is previous year 25-26. Yes or no? 2 previous year are there. So if I talk about the previous year 24-25. 24 is the year in which the asset was purchased. Did you use that asset in that previous year? It was put to use in the next year. In 24-25, you just purchased the asset. If you would have used that asset for a single day also, no, then also you would have got the depreciation for the full year, but at half rate. But could you use that asset in 24-25? You started to use that asset in this year. So in 24-25, there will be no depreciation. But in 25-26, you started using that asset, no? From 19th May, you started using the asset. In 25-26. Now in this year, you are going to get the depreciation. Full rate or half rate? Full rate or half rate? Understanding? Full rate. Correct answer. Yes or no? Now let me twist this example a little bit. Same thing I will put. When the asset was purchased and it was put to use on in the previous year 24-25, will you get depreciation? Because in that year the asset was not used only. Yes or no? Tell me, previous year 25-26, will you get depreciation? Yes. Because in that year the asset is used. Now, from 14th of December till 31st March, for how many days the asset is used? 180 days or more or less than 180 days? So here the depreciation will be at full rate or half rate? The depreciation will be for full year. But will it be at full rate or half rate? Will it be at full rate or half rate? Calculation of depreciation at half rate is to be done only for the year in which the asset was purchased. 25-26 is not the year in which the asset was. See, bloody I was writing any previous year. That same previous year. So depreciation for that, I'm talking about the first year. So the half rate depreciation concept is applicable only for the first year in which the asset was 24, 25. But unfortunately in that year the asset could not be used. So you did not get any depreciation. But in the next year when the asset was put to use, then in the next year definitely you are going to get the depreciation. Now don't calculate the number of days, because that is not the year in which the asset was purchased. Even if you use the asset for single day, no, still full year depreciation at full rate. Examiner will deliberately put you in this kind of trouble. Hello sir, will you remember? So this was the depreciation calculation. Will it happen for proportionate period of use of asset? Few months, few days? No, it will happen only in accounting. Under the Income Tax Act, depreciation calculation is always for either at or at half rate only if the asset was acquired and put to use for in that in which it was acquired. So restriction of half rate is applicable only in that previous year in which the asset is acquired. Getting my point? Hello? Now, all these examples, no, I have already explained. Okay, no? Now pay attention. Now, I'll give you one shortcut. One shortcut. Asset acquired in previous year 24 and in that same previous year, same, that is 24, 25, it was put to use. Put to October 2000. Please remember this date. This is my birthday, real birthday. I'm just 2 days younger than Mahatma Gandhi. Mahatma Gandhi is 2nd October. Myself, 4th October. This is my birthday, real birthday. Okay. So, if the asset is purchased in this year and it is put to use before my birthday, or it can be put to use on my birthday or after that also. Yes or no? Let's take it was put to use on 4th October. Which October? October has how many days? -3 days. 28 days in October it will be used. Yes or no? November 30, December 31, January 31, February 28 and March 31, exact 179. So if you start using the asset from my birthday till 31st March, it will be 179 days. What if you start using the asset from 5th October? 178. What if you start using the asset from 6th October? 177. What if you start using the asset from 7th October? It will be 176. The more you will go this side, the days will keep on going down. Yes or no? 4th October if it is put to use, If it is put to use on my birthday, it cannot be used for 180 days or more. It will be used for less than 180 days. In this case, what will you do? Depreciation at half rate. Depreciation at, this is the shortcut which I am giving you. No need to calculate the number of days also. Now, hey, wait. What if you put to use on 3rd October? You put to use on 4th. You put to use on, you will be able to use it for 179. But if you will put to use on 3rd, 180. If you will put to use on 2nd, 181. If you will put to use on, so if the asset was put to use before my birthday, any date, you will be able to use it for how many days? 180 days or more. Here, what are you going to do? Depreciation at half rate. Why? Since use will be for, use is less than 180 days. Hence the depreciation at half rate. And here the use will be greater than equal to 180 days. Therefore, depreciation at full rate. Done, sir? This you are going to see. The number of days you are going to count only in the year in which the asset is acquired. Request you not to count number of days for any other year. Full year depreciation, full rate. Even if the asset is used for 2 days, even if the asset is used for 5 days, whatever number of days used, in the later on years, depreciation always for full year at full rate. But the half rate is applicable only in the first year. And now you are not supposed to read, not supposed to calculate also. Just remember my birthday. Next year, 4th October, you are supposed to wish me happy depreciation day, sir. Happy half depreciation day, sir. So, what is the birthday? 4th October, asset put to use. Less than 180 days. See, whenever it is leap year, then one day will shuffle. Yes or no? But when the leap year is not there, leap year is, you will follow this only. Yes or no? What in the case of leap year? I will say asset put to use on or after 5th October. On or after? No, I will say after 5th October. Sorry, after 4th October. After, but if it was put to use on or before 4th October, yes or no, then it will be 180 days or more. But if it is put to use after 4th October, then it will be less than 180. But that I am going to use in the leap year. But this is not the leap year, no. You understood this one? Okay? Yes. Now, see, calculation of depreciation. Very easy, very easy. See, 3211, 3212, 3212A and 3213. Normal depreciation, additional depreciation and terminal depreciation. Yes or no? Very easy. See, if you are an assessee, you can be any person, but you are engaged in power business. You are engaged in. Now you can calculate and claim the normal depreciation in the following manner. Now the manner is prescribed for all the assessees? No. Only those assessees who are engaged in power business. So if you are an assessee engaged in power business, so the manner of calculating and claiming your depreciation, normal depreciation on your assets is given below. What are you going to do? You are going to take individual assets which are used for the purpose of your business. Take the actual cost of that individual asset, apply the rates which are prescribed in Appendix 1A to Rule 5.1a. By applying these rates of depreciation, you will calculate the depreciation and that depreciation will be allowed on SLM basis. Done. Your depreciation calculation is given. This is the manner in which you are going to calculate the depreciation. But this manner is given for whom? All assessees doing any business, any profession, or only the assessees engaged in power business, power generation, power distribution, power transmission. Hello? So your business is power business. Your business is in your business, are you using some assets? Every asset. For every asset, the depreciation has to be calculated separately. The calculation of depreciation will happen asset wise. So for individual assets which are used in your business, determine their actual cost. And on that actual cost, you will apply the rates which are prescribed in Appendix 1A to Rule 5.1a. By applying these rates on the actual cost of your individual asset, you will calculate the depreciation, and that depreciation will be allowed on SLM basis. Reducing balance or straight line basis. And see, if the asset was acquired in your business for the first time in this year, and in that year, if the asset is put to use for a period of less than, then the prescribed rate will not be taken as full rate, it will become half rate. But that will happen only in the year in which the asset was acquired and put to use in that year for a period of less than 180 days. Now simple, you are supposed to check every asset. You are supposed to calculate the actual cost and you are supposed to apply these rates. Asset wise rates are given. Asset wise, where? In IT rules. Which rule? 5.1a. And Rule 5.1a, there is one appendix. Appendix? This appendix, no, which pains. Appendix means table. So there is a table which is given in Rule 5.1a. In Rule 5, there is one table, appendix. In that table, the names of the asset is also written, and against the name, the rate is also. See, what type of asset was this? Generator. Generator. Go to Appendix 1A. Rule 5.1a, Appendix 1a. Find out generator. Generator. Generator, what is the rate written? Pick up that rate, and that rate you are going to apply on the cost of that generator. Apply that rate, you will get the depreciation. Wait! If the generator was acquired in this year, and in this year it was put to use for less than 180 days, then the rate which you are bringing from there, no, half of that rate will be allowed in the first year. But for every other year, that full rate will be allowed. Getting my point? Now that depreciation you are going to claim same amount every year, SLM basis. Sir, do we have to remember the names of the assets and the rates for those assets? What is my answer? No. The name of the asset and the rate of the depreciation will always be given in the, but we request you to kindly remember that this way you are supposed to calculate. This way you are supposed to. Will you remember how to calculate? All the information we will give you in the question. Apply that information, apply the process and calculate the depreciation. It cannot be easier than this. Hello sir. Depreciation done. 32 subsection 1. These type of assessees will calculate their normal depreciation in this manner. Okay. Now, simple thing. I'm giving you one example. Okay. See, this example has old years. I'll take new years. Okay. Pay attention. Previous year. 20. No. It was 2021. No. Okay. Previous year 2021. In this year, no, asset X was acquired. Assessee is in the business. What type of business? Assessee is in the power business. And we are going to now see how to calculate the depreciation. So when the asset was acquired? 2021. Now, can we take one date? Can we take one date? 20th of August 2020. This is the date of purchase. This is the date of, and it was put to use. It was put to use, let's say 20th of September 2020. Hello. The year was, acquisition year was 2021. In that year, the asset was acquired on 20th August 2020. Hello. And it was put to use on 20th September. Before my birthday or after my birthday? Put to use for less than 180 days or 180 days or more. So in that year, even if it is a first year, the asset was put to use for 180 days or more. So the depreciation for that year will be full year or half year? Full year. Understanding, no? But if the date would have been 20th October, after my birthday, then the depreciation would have been calculated at half rate. Yes or no? But here, will we calculate half rate or full rate? Full rate. Very good. Now the asset X was purchased and the actual cost, meaning the capital expenditure incurred on that asset, was 100 lakhs. How much? And let's assume that for this asset, the prescribed rate in Appendix 1A, in Rule 51A, the prescribed rate was 10%. See, normal rates are not given in that Appendix 1A. If you will see, no, you will go mad. 23.91%, 14.98%, 13.68%. Now you are going to remember the names and these type of rates. No need to go and no need to check. The rates will be given in the question. Okay. Now, for the sake of simplicity in calculation, how much we are taking? 10%. Okay. Assuming that this 10% was given in Appendix 1A. Okay. Now, first year 2021. 20. What was the value of the asset? What was the value of the asset? Will you calculate depreciation for that year? Because the asset is a specified asset owned by the assessee and used in the business. Yes or no? So on this asset, the depreciation will be calculated. Since the assessee is engaged in power business, so individual asset, the cost of that asset, on that the rate will be prescribed rate will be applied, and the depreciation will be calculated and claimed on SLM basis. What basis? So tell me, the depreciation will be how much? 10 lakhs. Sure. 10 lakhs depreciation. Now what will be the WDV? 90 lakhs. WDV will be 90. In 21-22, what will be the value? What will be the depreciation? So what will be the WDV? 22-23. 80, 10, 70. Yes or no? 23-24. 70, 10, 60. Now tell me, what is your previous year? Previous year 24, 25. Previous year, in the previous year 24, 25, what is the WDV now? 60. Will you chart depreciation? Will you chart depreciation? You cannot. Because in previous year 24, 25, asset is transferred. Now when the asset is transferred, let's take one date also. Okay. 19th of August 2024. This is the date of transfer. And the asset is transferred for how much? We'll take 4 possibilities. How many possibilities? Possibility 1, it was transferred for 42 lakhs. Transferred for possibility 2, it was transferred for 60 lakhs. Possibility 3, it was transferred for 82 lakhs. And last 85 lakhs. And last possibility 102 lakhs. These 4 possibilities are there. Now tell me, when did you transfer this asset? 24, 25. The asset is. Now if you have transferred this asset on 19th August, can I say as on the last day of this previous year? As on the 31st March 2025. Asset X is there in the business or not there in the business? Not there in the. You can claim the depreciation on any asset for this year only if that asset is there in your business as on the last day of the previous year. Do you have that asset in your business as on the last day of this previous year? No, you cannot claim depreciation. Sir, I can claim the depreciation from 1st of April till 19th of. I will remove my shoes and directly start hitting you from that shoes only. If you do that. Again trying to get into accounting. Very barely bloody I have taken you out of accounts and again you are going to go in the accounts. Sir, but the no means no. If you want to claim depreciation for any year, remember that asset should be there in your business as on the last day of that previous year. Why did you claim depreciation for earlier years, you know? In all the years, as on the last day, the asset was there in the business. As on 31st March 21, the asset was there in the business. As on 31st March 2022, as on 31st March 2023, as on 31st March 2024, every previous year, last day of that previous year, the asset was there in the business. Hence, the full year depreciation for that year was given. Tell me, in 24-25, do you have the asset as on the last day? Do you have the asset as on the last day? So if you don't have the asset as on the last day of the relevant previous year in your business, bloody depreciation cannot be allowed. No depreciation. No depreciation can be allowed for 24-25. Will you remember this? Now tell me, did you sell the asset? Did you sell the asset? How much you got? Or you can get 60, you can get 85, you can get. You are getting this amount against an asset whose actual cost was 100. On that, so far the depreciation allowed is 40. And whose WDV as of now is against this asset. Against this selling price is received. Getting my point? Simple, huh? Very simple. Tell me, how much was the cost of the asset? Out of that cost, how much cost already allowed under PGBP head in the form of depreciation? How much cost is still remaining to be claimed? Getting my point? Now, against this 60, against this, you are recovering entire cost recovered, or still some cost is remaining. How much? That is known as terminal depreciation. That is known as, which we allowed in this year only, terminal. 60 cost was supposed to be still allowed. But out of 60, 42 you have recovered, no? So how much cost is still remaining? That you claim in the form of terminal depreciation. We are going to allow that in this year only in the form of terminal depreciation. Yes or no? Now tell me, how much cost is remaining? How much cost is remaining? But you are selling the asset for, have you recovered the entire cost? Don't come. 60 was remaining to be recovered. 60 was remaining to be allowed. Entire 60 you have recovered. Don't come to us. But depreciation, what depreciation you are going to take? Out of 100, 40 lakhs cost we have already allowed in the form of depreciation. Done. And 60 lakhs which was supposed to be allowed in the form of depreciation, we would have done something for that. But bloody entire 60 you have recovered, no? So no tax effect will come now. Yes or no? 40 we have allowed, forget that, we will also forget. Yes or no? And 60 which we were supposed to allow, that we are not going to allow because entire 60 you have recovered by selling the asset for 60. Getting my point? Now there will be a problem. Now there will be a 85 you have recovered. Meaning this entire 60 you have recovered. And on top of that, how much extra you have recovered? That 25 is out of the depreciation which we have allowed you. Reverse. Deemed PGBP income. This is known as balancing charge. This is known as. So out of 100, bloody if you have recovered 85, meaning the cost, effective cost of the asset is 15. So we should have allowed 15. How much you have taken as depreciation? 40. Meaning how much extra cost you have taken in the form of depreciation? 25. If I say like this also, then also it makes some sense. But this will become a little bit complicated for you. Simple, no? How much cost is remaining? Out of 100, 40, cost of 40 is already allowed under the head PGBP. Out of the cost, 40 lakhs cost is allowed in the form of depreciation under the head. And how much cost is still remaining to be allowed? That entire 60 you have recovered, no? Because you are selling the asset for. But don't you think over and above 60, some extra cost you are recovering? How much? We will assume as if that extra cost is recovered out of that depreciation which we have allowed under the head PGBP. You should not have claimed that 25 lakhs as a depreciation. So we have allowed that 25 lakhs in 40 in the form of depreciation which you have now received. Reverse it. Reverse it. This is known as balancing charge. This is known as balancing. And this amount will be treated as your deemed PGBP income. Hello, sir. Now last case. Last case. 102. How much is the cost? How much is the recovery? 102. How much is the remaining cost? Meaning WDV is 60. Can I say if you have sold the asset for 100 and? If you have sold the asset for 100 and entire 60 you have recovered. And on top of that, 42 lakhs extra you have recovered. Don't you think out of the extra recovery of 42, 40 we have already allowed under. 40 we have already allowed under PGBP as depreciation. That 40 will be treated as your deemed PGBP income, balancing charge. But sir, 2 extra we have recovered. That will go to capital gain. That will go to, now please pay attention. See, if selling price is less than WDV, selling price is, what was your selling price? 45. 45, no? 42. It was 42. Sorry, my mistake. 42. WDV is What will you do here in this case? WDV minus selling price is how much? 18 lakhs. This will be treated as terminal depreciation under section 32(1)(3) will be allowed in previous year 24-25 as the deduction. This is the full and final depreciation which we are giving. Getting my point? Next one. If selling price is equal to WDV, possible? Selling price is 60, WDV is also 60. What will you do? No tax effect to be given because everything adjusted. Everything, no tax effect to be given. Now, if selling price is more than WDV, but it is still less than actual cost, possible? It is still less than. So here what are you going to do? Here you are supposed to take selling price minus WDV and actual cost minus WDV. What was your selling price? 85. What was your WDV? 60. 85 minus 60 will give you 25. Yes or no? Actual cost was 100. WDV was 60. This is going to give you the amount of depreciation. So any recovery over and above WDV, over and above, to the extent of depreciation, to the extent of, will be treated as your balancing charge, deemed PGBP income. Getting my point? So this or this, whichever is lower. This or this, whichever is lower amount will be 25. This lower amount will be treated as balancing charge under section, balancing charge under section 41 subsection 2, taxable as deemed PGBP income. And this will be taxable as deemed PGBP income in which previous year? Previous year 24-25, the year in which the asset is sold. Yes or no? Now see, same thing which we are going to do, same thing. Selling price greater than WDV and also greater than actual cost. Yes or no? So here selling price minus WDV. Selling price was 102, WDV was 60. So how much is the recovery? 42. And actual cost minus WDV will give you the amount of depreciation. Yes or no? 100 minus 60 will give you 40. This or this, whichever is. So lower amount is 40. This 40 will be treated as balancing charge under section 41(2), and this will be deemed PGBP income for previous year 24-25. Getting my point, sir? Now wait. Balancing charge, meaning your deemed PGBP income, cannot be more than the cost which was allowed under the head PGBP. How much cost we have allowed? So how much amount we can charge under PGBP? 40. So out of the cost, if we have allowed 40 as a depreciation, so under the head PGBP, this 40 will only be treated as PGBP income, deemed PGBP income. Any recovery over and above that cannot be treated as your PGBP income, that is your capital gains. Getting my point? So now what are you going to do? 42 or 40, whichever is lower. Even though you got a profit of 42, over and above WDV, you got 42, but entire 42 cannot be charged under the head PGBP. Only 40 can be charged because 40 cost was allowed in the form of depreciation. So to the extent of 40 only, consider as your PGBP income. Now tell me, what was the selling price? minus the actual cost. Why I am doing actual cost, you know? Entire WDV you have recovered. And the depreciation which was allowed, hello, is also reversed. So depreciation which was allowed is reversed. Entire WDV is also considered, recovered. So how much is the cost? 100. 100 lakh of cost could not be allowed under the head PGBP. 60 which was allowable will not be allowed because the asset is sold. 40 which was allowed, hello, is now reversed in the form of balancing charge. So entire 100 lakhs cost which was supposed to be allowed under PGBP head is thrown out of PGBP head now. Now that will come to capital gain, 100. How much you have recovered? 102. How much is the amount? 2 lakh. That will be treated as your capital gain. Understood? Yes or no? The things cannot be easier than this, huh? I'm sorry. Did you understand? Will you remember? See, these kind of things are there, but they don't ask you these kind of things in the exam. I feel so bad. You just thank the Almighty that I don't set your papers, huh? If I would have been your examiner and I would have been setting the papers, no, 100%, I would have exploited all these concepts in the exam. Bloody small, minor things they are asking in the exams as if the paper they are setting for BCom students. And still you are not able to write. You feel so bad. Because these types of concepts are also there which they are not exploiting. In fact, your syllabus of DT is too huge. The paper should be for 100 marks. That's what I feel. And if the paper is for 100 marks, no. Remember, there are many areas which can be tapped. And then only you will study properly. Right now, your studies are selective studies. But whatever it is, we have to pass the exams. After passing, we will get the knowledge. And in final CA, if you are coming in front of me, okay, no? We'll see in the final CA, I'll show you the stars. In the daytime, you will see the stars and moons and everything. Not sun. Sun you will see in the night. So, let's hope you pass in this attempt only and we meet in final CA very soon. Okay. Now see, this entire thing which I have given in my notes. Example I have already given, but the years will be different because the notes are for last year. I have not updated these notes. Okay, no? But you will get the entire idea. Don't worry. Okay. Now, the above asset was transferred in which it was. Then don't even talk about terminal depreciation. And for example, in previous year 24-25, you have acquired the asset. Yes or no? And in that same year, you have sold the asset also. First question, is the asset there in your business as on 31st March? No depreciation. Bloody, if you have not claimed any depreciation on that asset, there is no chance of terminal depreciation and balancing charge. Directly you are going to calculate capital gains. But if that asset, on that asset, for a single year also the depreciation is charged, meaning the asset is sold in any year after the year of acquisition, yes or no, then terminal depreciation can also come and balancing charge can also come. But same year it is not possible, yes or no? So we are going to continue from here tomorrow, and tomorrow we are going to end this chapter. Okay, see, few important things are there where I have to give you this much explanation. I will not touch the, easy sections, because I want to solve 1 or 2 questions also on PGBP, so that you will come to know that how to solve the question. So tomorrow we are going to solve 1 or 2 questions of PGBP. Okay, and in that question, important concepts will be there. Those concepts will touch, and other things, as many things as we can cover. And day after tomorrow, we are going to start with capital gains. Okay, see you all tomorrow. and I've sent you the notes. I guess you might have got the notes. Read the notes positively today. Huh? I have covered each and everything. Not a single thing is left. Everything is there in the notes. I want all of you to read those notes and come tomorrow. Okay? See you. Bye-bye. Yes, thank you. Bye.